Hi, well, good morning and good afternoon. Welcome to today's presentation. We're going to be discussing the retirement income mindset and a little bit of an overview of the new RMA certification here from the Investments and Wealth Institute. My name is Devin Ekberg. I'm Chief Learning Officer and Managing Director of Professional Development here at the Investments and Wealth Institute. It's my pleasure to welcome you to this webinar. I appreciate you taking some time out of your busy schedules to come check us out. My goal today is really to give you a few things to think about, a few things to walk away from today to think about in terms of what your client's mindset is around retirement and how you can better add value to that relationship. And, of course, we'll be talking about the RMA certification, and I'd like to just kind of share my thoughts about where it fits into the industry and maybe some benefits to not only you as an advisor, but also to your clients in terms of going through a program like this, and where I think it sort of differentiates between some of the alternative programs that are out there. So I'll try not to make it a sales pitch, but really just trying to give you some information about whether this is relevant to you and your practice, and ultimately whether it will produce a better outcome for you and your clients. And so that's my goal today, and whether you decide to pursue the RMA certification officially or not, or go through some of the education, or you're just kind of curious about it, hopefully you can walk away from this session today with something useful, and that's my goal. Now, if you're not familiar with our organization, we are the Investments and Wealth Institute. We're a professional association. We are best known for the certifications that we administer. So the one that probably is most recognizable is the CIMA. That one's been around the longest, the Certified Investment Management Analyst. We've also got the Certified Private Wealth Advisor. That's typically for folks who are managing and doing holistic and comprehensive wealth management planning for high net worth individuals, ultra high net worth individuals and families and so forth. And of course, the new designation that we just acquired, well, I guess it's not new anymore. We acquired it about 2 years ago, but it's actually been around for about 12 years. And I'll kind of share some of the where it kind of came from. The Retirement Management Advisor, RMA. Beyond the credentials that we administer, we are also an education provider. So we work very closely with university partners like Yale and University of Chicago and Wharton School of Business, basically top 25 business schools, to develop an academically validated and academically sound approach to, investment management, wealth management, retirement management, and so on. But, the whole point not only is it to be academically validated and researched, but also to be practical. So something that you can walk away with and understand and institute into your practice today, and immediately start to add some value. That's kind of what we're all about, and that's what we try to strive to every single day. Now, the whole point of attaining this knowledge and these skills and the ability to do and exceed in these types of technical programs is to differentiate yourself. And from a retirement perspective, there are lots of ways that we can distinguish ourselves as advisors to retirement clients. And I think all of you are probably familiar with all the research that's coming out in terms of the demographics that are pushing retirement and retirees to kind of the forefront of some of the planning and wealth management strategies that are coming out, some of the products and things like that are coming out. You've probably seen some of the research that suggests that this segment of the market is very underserved. There's literally a shortage of advisors who are competent in dealing with retirement planning to the degree that needs to be done. And, quite frankly, there's a shortage, I think, of competent education that's out there. Much of the retirement space that I've seen from an education perspective is actually, unfortunately, driven more by products and firms. I don't want to pinpoint certain industries and so forth, but things like annuity products and things like that have sort of been pushed from a product perspective, but not necessarily from a client-centric perspective. And the reputation of some of the advisors has been damaged, I think, a little bit because of that approach. So the mindset that I want to sort of institute here today is really what's the best way to approach the retirement income mindset. I'll give you some examples of that. But also, how do you differentiate yourself as an advisor amongst all of the different segments and channels that are doing retirement solutions, so you can give your clients the best chance to meeting their financial goals. And to me, it really starts with understanding what is it that retirement clients actually value. When you discuss retirement plans and policy statements and things like that with your clients, what are they really asking you to do? And it seems like a really straightforward question, but it's surprisingly difficult. And I'm going to kind of go into a history lesson. If you've ever seen me speak before at a conference or a faculty or anything like that, you know that I always like to tell stories, and this is no exception. So you're going to get a story whether you like it or not. So let's actually talk a little bit about history here. So I'm going to give you a lesson about Kurodas. By the way, has anybody ever heard of a Kurodi before? This is kind of an ancient, kind of a very primitive way of providing retirement income and retirement solutions to folks in the 1500s. And by the way, if you have any questions or concerns, there is a question. If you look at your dashboard, there's a question feature or a chat feature. I'm monitoring both, so if you want to shoot me a question, I'm happy to answer that in real time for you. So here's an example. So this book, this image is from the National Archives of London. It is literally a document that explains what this annuity product looked like in the 1500s. And we're talking about Ralph and Agnes Bagshaw. We don't know their ages, but we do know that they lived in England. They were approaching, I guess, what they would call their retirement age at that time, although we don't know exactly what that age was. So they go up and basically bang on the front door of Ford Abbey Monastery in England, and they say, hey, look, we want to pay you. We want to live here. We want to live in the monastery. We're done with our working lives. We're not able to take care of ourselves anymore to the degree that we need to. So what we'd like to do is enter into an official contract with the monastery called a Kurodi. And in return, the monastery will basically give us 8 wagon loads of firewood, 4 casks of conventional bread, 3 casks of common bread, 5 gallons of conventional ale, 2 gallons of small ale, and daily, we'd like to get a portion of fish and meat for at least 2 people. And yearly, you'll have to give us £5, 6 shillings, and 8 pence for basically living expenses. And for all of these, products and services for the rest of our existence, we don't know how long they were going to live. Basically, a longevity solution here. We will purchase this arrangement for £20. And this is in 1533. And by the way, I think that was a lot of money. I think these were wealthy. I think Ralph and Agnes were wealthy at that time. So by the way, I'm just going to pause here real quick. If you look at how this is structured in terms of a retirement solution, is £20 for this? Do you feel like this is, as an annuity product, is this underpriced, overpriced, or probably about right? I'm kind of interested to hear what you guys think. I'm going to go into a little bit more here in a second, but just to kind of pause there, that feels like it's a pretty good deal, right? And these are the precise numbers. It was literally in the document here. So these are the precise numbers of this particular retirement solution at that time. That feels really underpriced. I'd probably actually jump on that. And the reason why is because, look, it's sort of satisfying exactly what Ralph and Agnes need and want, right? They know to some degree what their consumption patterns look like, in terms of bread and ale and fish and meat and so forth. They know that they're going to need a little bit of financial assistance as well, the firewood as well as part of a consumption. They're literally kind of looking at their household balance sheet and looking at their assets and their liabilities and their consumptions and so forth, and they're trying to figure out what they can purchase to serve their retirement needs in the future. And this actually feels like a really good deal. And sure enough, it actually was an extremely good deal for them. The bishops at the time didn't like these Kurodis. What was happening was, they were concerned that, it was a huge financial burden at the time. So some of the bishops come out and say, well, the whole house, the whole monastery is completely come to ruin by the sale of Kurodis. And the bishops were concerned that lodgers weren't really, when we say lodgers, we would mean the retirees in this case. They weren't even associated with the religious purpose of the institution. So these just ended up becoming a financial burden for some of these monasteries. And then the Pope Adrian V, the guy on the left here, he decreed that those who sold Kurodis through these monasteries would be excommunicated from the Catholic Church at the time. So these kind of became a big deal. But what was happening was that they were becoming necessary for these retirees who couldn't necessarily take care of themselves. So I'll just kind of pause here. For Ralph and Agnes, this was actually a pretty good deal. They ended up, paying in advance for these services that they needed. And even though, those products ended up going away because literally the people executing them would be excommunicated from the church if they continued to do that, Ralph and Agnes still got kind of a big deal here. Well, what ended up happening was King Henry VIII, and you guys probably all know this story, he fell in love with Anne Boleyn. The Pope didn't want him to divorce his then current wife, Catherine of Aragon, so he just went ahead and made himself supreme head of the Church of England. This was 1534, a year after Ralph and Agnes purchased their Kurodas. Over a few years or so, they basically dissolved all of the monasteries around 1536, and he ended up just appropriating all of the assets and income. And unfortunately, for our example, Ralph and Agnes Bagshaw, they were evicted from their retirement residence, and that's no good. And the only reason we even know this story is because the document that I showed you a couple of slides ago is actually a lawsuit that was entered at the time. Again, these were wealthy individuals. They ended up suing King Henry VIII because they're like, hey, we want our 20 pounds back. We didn't get what we had entered into the contract. Now, I don't know how that lawsuit ended up happening. Knowing what I know about King Henry VIII, I'm pretty skeptical that they got their money back. So we have no idea what happened to Ralph and Agnes. But certainly a very early example of credit risk when introducing a financial product like this. And over the years, there's been other kind of structures here when it comes to retirement income, other kind of annuity structures. Tontines became kind of a thing. I'm not going to go into those, but they're kind of an interesting sort of ancient version of a life insurance product. Reversionary annuities is kind of a life contingent type annuity product, came about in about the 18th century. Nominal annuities kind of came about in the 19th century. Classic example is the government of Canada at the time, I think in about 1850. They were paying a nominal annuity of $4 a year to the native, I guess you can't call them Native Americans, the Native Canadians, $4 a year to use their land. By the way, that's a nominal annuity. So literally in 2018, they were still paying $4 a year to that contract. So we all know kind of how that ended up. And then we've experimented with certain things like GE, for example, came out with their long-term care type program in the 90s that significantly understated how much risk providing retirement services to their employees would cost GE in the end. So the whole reason I'm kind of giving you this history lesson is one thing that I want you to walk away with. And this is the one thing that if this is the whole point of today's presentation, is that these retirement solutions were customer driven. They literally went up and pounded on the monastery door and asked for these things because they understood that that's what their needs were. And it was a very simple retirement solution for them that they understood and that they could stick to, and they felt comfortable with it. They felt confident with it. And they probably, at dinner with their friends, talked about how confident they felt in pursuing those type of retirement solutions and products. So it's really easy to understand why a retiree would want to buy them. Never mind, whether the annuity at the time was mispriced or not. It was easy to understand why a retiree would pursue that because it not only met their financial goals and also their literal essential needs, but it also behaviorally made sense to them. It was something that they could stick to and understand. And that's really important. If you contrast that now with sort of modern retirement solutions, and I'm not going to pick on any firm or product or anything like that out there, but if you look at some of the annuity products that are coming out, some of these complex investment wrappers within annuities, some of the, I guess you'd say maybe some lack of transparency and so forth, some of the modern retirement solutions kind of have this reputation that clients are not actually asking for them. They're really being more sold, right? And again, this is not to knock any advisor that deals with annuity products or insurance agents and things like that. Most of them are operating in good faith, but they sort of have this reputation that these are not products that are bought, they are products that are sold. clients are not banging on the door of insurance companies to create annuity products for them that have, these complex investment wrappers and so forth. Does that make sense? So this is a key point in understanding the retirement income mindset of clients. And so if you're going to call yourself a retirement advisor, what you need to understand is that creating an investment plan with solutions really ought to be done from a client's perspective, not necessarily from a product perspective or even your firm's perspective, or really even your experience as an advisor's perspective. It really must be the client's perspective. And so as we were evaluating the landscape of education around retirement advice and some of the credentials and designations that were out there, what struck me was that many of the retirement credentials out there were, in fact, developed not from a client's perspective, but unfortunately from a firm's perspective or from an advisor's perspective or even a whole product channel perspective like the insurance industry. There was one credential that did stand out, which was the RMA credential, the Retirement Management Advisor. And that was really the whole reason that we decided to acquire it as an organization and really try to elevate it within the industry. So that's kind of what we're here to discuss. Does that make sense? That was kind of a long story short, but again, I hope it sank into you as a salient point that it must be done from a client's perspective. So the RMA is a program that's an advanced certification. It focuses on building custom retirement income plans specifically for retirement clients to mitigate some of the specific client risks as they approach retirement, and then ultimately to monitor their plan in retirement. It's a completely different mindset to go from accumulation to decumulation, and there's all sorts of unique risks and things like that are involved. And there's a unique sense from the client of what questions they're asking and how they're asking and how those answers and solutions need to be presented to them so that they can feel comfortable with it. This credential takes about 4 to 6 months to complete. We've seen people complete it sooner than that. We've seen people take longer with it, and that's perfectly fine. The idea is to kind of deliver specialized expertise and skill and ultimately distinguish yourself from the average advisor, in ways that are very practical. Now, the question that I get a lot from people is, where does this fit in? I've got my CFP, for instance. Now, I personally don't, but people will say, well, I've got my CFP, and there's a part of the CFP that deals with retirement and retirement income. And so I understand, the difference between a tax-deferred account, a tax-advantaged account. Maybe my client has a pension, and, maybe there's an annuity product that. So I feel like I've got a good base of retirement planning through the CFP credential, and that may very well be the case. The way we're sort of positioning RMA is a post-CFP credential. This is specifically designed for retirement, and that's all it does is retirement planning. And it's very comprehensive when it comes to dealing with the unique risks associated with it, the unique aspects of developing an entire household balance sheet around liabilities specific to retirement. And it really goes much deeper from an academic perspective of what the framework ought to be for a retiree. So again, I would elevate it beyond CFP, not to say that CFP is deficient in any way, but it simply doesn't go into the depth of comprehensive planning that this credential does. I also get questions about comparing it with other credentials that are out there, like RICP, for instance, from the American College. And I've had a chance to study that, and I'm very familiar with it. The faculty there at the American College is fantastic. Wade Fowle, Michael Fink, a few others stand out to me. But if you look at the way that it was created, it's not a bad product, and it's certainly as comprehensive as it ought to be or should be. But it definitely has a tilt towards the insurance industry. In fact, many of the projects and programs around RICP were sponsored by New York Life, for instance. Not a bad company. Love New York Life, but there's definitely a tilt to the insurance side of things. And so it doesn't necessarily get into non-insurance, non-annuity type solutions when it comes to income and portfolio construction and things like that. So we didn't feel like it was balanced enough, I suppose, for those that don't necessarily lean towards the insurance channel. Now, the question that I'm getting is, do you need to have the CFP first to pursue the RMA independently? And the answer is no. You do not need the CFP. The only point I wanted to make comparing it was that we consider RMA to be more advanced than CFP when it specifically comes to retirement planning. I'll go into the requirements for you, to be able to be qualified for the RMA program, but the CFP is not a requirement, although it is a waiver for some of the other requirements if you don't meet some of those, if that makes sense. So I hope I'll get into that here more in a little bit. I think the biggest things, if you wanted to kind of summarize what the RMA program is or does, is kind of in these 5 bullet points here. One is that it's multidisciplinary, and what I mean by that is it's not, yes, it talks about annuities, it talks about insurance products and other things like that, but that's not its focus. Its focus is really developing the right solution at the right time for the right client, and it's product neutral, and it can be used. It can be used by any channel that you might be affiliated with. So if you're a wirehouse advisor, great. This will fit in exactly right in with what you already do with your wirehouse firm. If you're an independent RIA, this will give you a structure, I think, from a multidisciplinary perspective that you can implement. And quite frankly, if you're affiliated with an insurance firm or whatnot, this will be great because you can literally create solutions for your clients that may include the products that you are affiliated with and sell, but your client will understand where they fit in and why, and will probably end up having a better experience with that. So the multidisciplinary approach, I think, is very powerful. Secondly, I think that to better understand the client's mindset. So this is kind of the behavioral finance element of things. Understanding that retirement clients have different behavioral needs than people who are in their accumulation phases, at younger ages and so forth. Really understanding that shift and developing not only the solution itself from a technical perspective, but how you're actually communicating with your clients matters a lot. And if you're communicating in the same way, you really develop and improve that communication and that trust, and ultimately the planning outcomes end up being just much better. So I'm very proud of the fact that we've implemented the behavioral elements of this. And then specifically, number 3, I would say that you're looking at various strategies for developing custom risk assessment and solutions to retirement risk. And there's a very unique risk mapping feature or technique, I guess you'd call it. It's a very practical decision-making framework around retirement risks that's very clinical. It's the same approach that a doctor would use to diagnose and solve for, a patient's risk, for instance. And so that was actually the part of the program that I was drawn to the most, was the custom risk mapping and so forth. And while I'm talking about kind of these practical tools like the custom risk mapping program and so forth, there are a few others that are unique to this program that I really like. One, for instance, called the household balance sheet approach, which is almost kind of an institutional level, quality level way of understanding what the client's assets and liabilities are, so that you create an asset liability matching program, again at an institutional level, but at the client's at an individual client's level. And this, if you're in a fiduciary channel like at a wirehouse or an RIA, this is actually a very defensible process that's very unique. So there's also what's called a procedural prudence map that you can follow literally off the shelf. Let's say, suppose if you're under a suitability standard and you're looking for a way to document your decision-making process in terms of some of the regulations that are coming out, this procedural prudence map is very useful for that as well. And of course, with any certification that we administer through the Investments in Wealth Institute, we ask you to, serve by the professional guidelines and standards that we operate under, which is the Investments in Wealth Institute Code of Professional Responsibility. A couple of questions that just kind of came in. I'll just take an opportunity to answer those. The quick question is, can you discuss how much of the program is offered by video? I'll get into that in a moment, but it is a mix of video, like kind of recorded lectures. There's a live component to it, so there's an executive education program that has live instructors as well that you'll be participating in. But there are some readings. There's a unified textbook with readings. So it's a mix of readings, recorded lectures, quizzes, activities, case studies. It's very interactive, but then you have a live component to it as well. There's no software program that is provided within the program, and that's on purpose because as an objective association, nonprofit association, we can't really endorse certain types of software providers, and we're not in the software business, but we certainly have a lot of tools that can help you decide which software program may be appropriate for the type of planning that you do. Another question that came in is, when was this last updated? And a couple of points to that. When we acquired the program, we did a fairly large update to the program at the time. We sort of Investments and Wealth instituted is the best word to say. We sort of elevated some of the materials to what we would expect from the Investments and Wealth Institute. So we did a major update in 2017, and then it is being continually updated since we did our first major update in 2017. As an example, for instance, when the new tax laws came out, we had to make some adjustments to the program around Social Security and Medicare type decision making and the programs and so forth. So we've updated, many of those things for you. The last question is about continuing education credits, and I'll answer that, Lynn, in just a second for you, before I lose my voice, hopefully. So the things that I want you to understand as an advisor is maybe some ways that this can help you in your practice. One is, I actually think this is a really powerful acquisition tool that can help you attract and retain and actually better serve your clients. Attracting in the way in terms of using language that will resonate with clients to attract those clients. And then literally think about it, if you've got a client that understands and is bought into their retirement plan in such a way that they have so much confidence in it that they're sitting down to dinner with their friends and talking about different elements of it, and that's a very powerful association that's good for you as an advisor, because you can attract those people, you can retain them, they're stickier if they understand their solution, and quite frankly, they're going to be discussing it with their friends, and those are opportunities for you to acquire more. It targets an important market, and it's not just for post-retirement clients, but this is actually best suited for people who are approaching retirement within the next 10, 15, 20 years or so forth. A lot of the solutions that we implement are to improve their future scenarios as they approach retirement. And again, I think this distinguishes you from the average person out there that may have a credential that discusses retirement as part of it, but is not necessarily the focus of it. And the frameworks, I think, within the program are useful for you to adopt, whether you adopt them off the shelf or use them to inspire, the different frameworks that you use, I think is very powerful. And then the useful tools that I talked about, like the household balance sheet, the mapping tools and stuff like that. And then I'll just kind of point out that the point of a lot of these knowledge and skills is to develop a specific retirement policy statement for your clients. In the same way that a consultant would create an investment policy statement for a foundation or endowment or an institutional client, we're literally creating that policy statement as a retiree that will address some of the unique aspects of a retiree client. So if I had just had to summarize why this might be useful for you, this slide does a good job of that. But again, don't forget that, again, it's really from the client's perspective. They're going to develop a sophisticated plan that they will understand and stick with and communicate to their friends using that language, which would be really powerful. They're going to gain confidence, they're going to make better decisions, and ultimately, and I say this a lot, but people are not looking to optimize their wealth per se. That's part of it, but they're really looking to optimize their lives with their wealth, and I think this is a way to really kind of tell that story. This is kind of a quick look at the program elements to it. And you can see that the client is really built in the middle, and you've got kind of this diagnostic section, which is really the planning process of the household balance sheet, looking very deeply at the household cash flows, but also kind of the assessing risks, risk allocation. It's kind of there's a toolbox in there that kind of discusses a framework of strategies that you can implement, and then ultimately how to present and monitor the plan. So again, it's all built around the client and really built around the holistic planning retirement process. This is a little bit of a more detailed look at kind of the body of knowledge here around the diagnostic kit, assessing the retirement risks, the allocations, the product selections. Notice that the product selections almost kind of come last after you've done some of the planning features in there, and certainly monitoring the plan. Now, I'll get to the process. So a lot of people are asking about the process, especially around CE requirements and things like that. With all of our certifications, you kind of have to have the 4 E's, right? You have to have the experience. You have to sign, and disclose any issues that you might have from an ethics perspective. You certainly have to go through the education, and then there's an exam that we administer. That's kind of the 4 E's for any of the certification programs that we have. Step 1, specifically for RMA, is to go through an online course. Again, that can take anywhere from 3 months to 9 months or longer, depending on how you want to go through it. There's a set of readings. It's a unified curriculum. You've got recorded lectures, quizzes, case studies. I think we talked about that a little bit earlier. By the way, if that's all you wanted to do and stop there, and you didn't care about having the letters after your name, you're certainly welcome to just do the online course and then walk away. That's great. We would love for you to do that, actually. But again, if you want to kind of take that extra step, you go ahead and pursue the certification itself. The second step after you've done the online course is to go through an education capstone. It's a 2-day executive education program. We bring in professors from various universities that we work with. We also bring in practitioners. Some of those names you're going to even recognize. I'll show you in a moment. There's networking opportunities. There's opportunities for Q&A. We usually co-locate them with some of the other conferences that we do, so you have a real chance to see, some of the real high-level people that we tend to bring to our conferences through this capstone. And then, of course, you take the certification exam as step 3. You can do it in person at one of our events, or take it online as a proctored exam. There's 100 multiple-choice questions, 3 hours to complete. My personal feeling is that right now, this is about the easiest time it'll ever be to take this exam. It's only going to get more difficult as the program grows and becomes more difficult as well. So if you show up and do the things that we ask you to do during the program, I don't think you'll have any issue kind of passing that exam. The RMA capstones, as I mentioned, are co-located with some of our events. So, for instance, over 2019 and 2020, there's really 3 opportunities that you could, and then that will probably increase in 2021 as this program grows even further. But man, those look good to me. So I love going to Florida in December. That's a destination for me that I'm happy with, a beach resort. This year, you still have time to do that in December if you'd like to. Next year, we'll be at our annual conference in Boston in May. We're bringing in some huge names because Boston is this center of academic excellence with MIT and Harvard and Boston University and a few others there. You're going to see some big names at that one. Or you can, again, go to the destination location in next December if that works best for you. But this is all on our website if you want to take a look and kind of plan and decide if you want to pursue that. The RMA Capstone faculty that we bring in, names like Michael Kitsis. I'm sure you probably all heard of that. Dana Onspa, she's a registered investment advisor out of Scottsdale, Arizona. Fantastic. Bob Powell, he's an author and editor at TheStreet.com. Marcia Mentel, Michael Guillemette, Arun Muraladhar. I'm even on the faculty if you can stand to listen to my voice any longer. But we also tend to bring in special guests as well. For instance, next year in Boston, might as well let the cat out of the bag. We're looking at Bob Merton from MIT. He's a Nobel Prize winner. Will come in and act as faculty for us. So really a great opportunity to get involved at that particular level. A couple of questions that I just want to answer real quick. The CE requirement for RMA is 40 hours of CE every 2 years. So if you split it up per year, it's 20 hours per year. If you are a CIMA or a CPWA, it's not an additional CE requirement. So your CE that qualifies for CIMA will also qualify for RMA as well. And that's a huge benefit. So you don't have to double up your CE even though you have 2 different credentials. If you're a CFP holder, this whole program qualifies for CFP CE. So you could bang out your whole CFP CE requirements for an entire year just by going through the RMA program. That's a great way to knock out that CFP CE as well. let's see. So the question is, if you don't want the designation itself, but you want to go through the education, how much do you actually miss at the capstone course? I don't think you're going to miss out on the technical knowledge. It's pretty much built into the curriculum itself, but there's a whole bunch of context and best practices and discussion and dialogue that happens at these capstones. And I'll just mention that the RMA capstones are the highest rated programs that we do at the Investments in Wealth Institute, like better than Yale and Wharton and the University of Chicago. So that maybe speaks to some of the past feedback that we've gotten on some of this stuff, which is really quite powerful and something that we're proud of. Another question that came through is the process complementary with like software, like financial planning software like Money Guide Pro and so on and so forth? Yes, I think it's complementary. In fact, I think, Teresa, what it does is it actually gives you a framework to analyze the inputs and outputs of a software like Money Guide Pro, and actually helps you maybe even customize that available software more effectively. And it gives you kind of a framework to identify whether that software is giving you the outputs that you're actually looking for. You know, tinkering with things like discount rates for healthcare costs and, estimating consumption patterns over time. You're going to get a real good skill set on how to use that software, no matter what it ends up being. Question is, in Boston, the Heinz Convention Center is outdated. There's no argument there for me, but Boston is an awesome city, and we can live with a convention. But they've actually made some improvements. I don't know when the last time was that you were there, but they've made some improvements to the Heinz Center. How many hours does the program satisfy for SEMA CPWA? I want to say 28 hours, Jonathan, is the number. I'll have to check on that number. That is my understanding and recollection. And how about getting your continuing education programs qualified for CPAs? That's a great question, Michael. We have a few. I would say a small number of our membership have their CPAs, and we actually work very closely with AICPA, which is an organization that does continuing education for CPAs at some of their big events like Engage and things like that. And I want to say, Robert, I think it's 28 for CFP, if I'm not mistaken. So those are all really good questions. And by the way, I think 28 is actually the requirement for CFP, if I'm not mistaken, and they don't carry over year over to year. So I think, Robert, you could bust out the entire 28 for CFP on that. So I didn't want to necessarily get into the sales pitch here, but like I said, I wanted to give you an overview of kind of how we are thinking of retirement planning. And this is a little bit of a new space for us. We've been around for 30 years. We've been mostly known for the investment management, investment consulting spaces. But this, demographically speaking, this is not going to go away from a retirement planning mindset. And I think over the next 2 decades, you'll find that there's an enormous amount of opportunity as an advisor to add value to your retirement clients. And doing so in the right way is something that I think most of you are interested in, which is the reason you showed up today. So I would strongly urge you to think about it. I would strongly urge you to think about the landscape of retirement products and credentials and designations that are out there, and really analyze whether those are doing it the right way or the wrong way. And I have a strong feeling that the RMA program does it the right way. Somebody asked me earlier, and I didn't answer the question, is how many RMAs are out there? Okay, so right now we have around 200 RMAs that are out there, so it's not a lot. But we are doubling in size very quickly. So next year, as we end up with 400, the year after that, as we end up with 800, as the year after that, we end up with 1,600. This is going to grow substantially over the next program. The big wirehouses are very excited about it. For instance, it's been approved at Morgan Stanley, Merrill Lynch, others. A lot of independent RIAs are really thinking about this program. And so I'm extremely excited about its opportunity for us to grow it. And quite frankly, as you decide whether you want to pursue it or not, you actually have an opportunity to shape the program really well as well. We're a volunteer organization, and a lot of the improvements that we've made to RMAs have literally come from the RMAs themselves. And so you have an opportunity to be part of something bigger, I think. Yeah, a few comments coming in, prices and things like that. What I'm going to have you do is reach out to Susan Baber. The prices are up on our website, and it kind of depends whether if you're already a member of the Institute. If you're not a member of the Institute, there's a little bit different pricing structures. There are pricing structures about whether you want to just go through the education program only, or if you want to pursue the designation itself. So there's a few different options. It's very affordable, though. The number I want to throw out there is about $2,500. Compared to some of the other programs that we offer through Yale and Wharton and so forth that are in like the $8,000 range, $2,500 is fairly affordable, and kind of up or down depending on how you want to do it that way. And absolutely, and Michael, that's a really good point. As far as the CPAs have a huge CE requirement, and there's not a lot of good sources for that CE. And we'll do the best we can to kind of accommodate some of that for you. But very, very good comment. As far as the time commitment goes, look, if you spent, I think, 2 hours a week, at whatever part of the program you're at in terms of the RMA, going through the lectures or the readings and so forth, I think you'd have no trouble finishing the program within that time frame, the 4 to 6 months time frame, 2 hours a week. There's some chunky technical material in there, but it's certainly not like SEMA, certainly not like CFA or CFP, where you're hiring coaches and teachers and things like that and stressing about the exam. I think if you do what we ask you to do, 2 to 3 hours a week is not a big deal. I think that people could get through. You could certainly do it while you're absorbing all the projects that you have at work and family and other things like that. So really good questions. Guys, I appreciate you taking some time. I went over time a little bit. Thank you for that feedback. I appreciate that. If you want the presentation slides itself, we're happy to share those with you. Just let us know. We can email those to you. Might have Susan Baber. She's our Associate Marketing Director involved with the RMA program. She'll work with you to answer any specific questions about whether this is relevant to you at the right time, at the right place. And, of course, all the information is available on our website as well, investmentsandwealth.org/RMA. And, heck, guys, if you have any questions, just reach out to me directly. I'm happy to answer them for you. I was proud to be, the person that really evaluated the program during the acquisition phase, and I was glad that I did. I saw a lot of things that were done the right way. And so thank you for that, and thank you for your time today. And we'll look forward to hearing from you in the future, if you have any additional questions or concerns. But again, remember the mindset. It's your clients are banging on the door for these solutions, and they have something in their mind. How they literally have how many wagon loads of firewood they need in their mind. We don't want to bombard them with complicated products that they're not asking them for. So thank you guys very much. I appreciate it, and we'll talk to you next time. And take care.